Welcome back to Ferocious Education. This is Zed. Today I'm going to be talking about Palantir PLTR. Now, this is an update to my previous videos. Nonetheless, this will give you everything you need, but if you would like to watch my previous ones, you'll find it in the description below. I've broken this video into due diligence and technical analysis. I recommend that you watch both, but if you don't want to, you can skip to whichever one you want in the description below and in a comment pinned to get you right where you want. Make sure to drop a like to this video to help this channel grow, subscribe, and leave notifications on, and let's jump right into it. PLTR, powered by Apollo. Some of their products include Palantir Gotham, which integrates, manages, and secures and analyzes all your enterprise data. Palantir Foundry amplifies and extends the power of data integration. Palantir Apollo, where power of SaaS, where no SaaS has gone before. And their entire program, or their entire software, is run by Apollo. It's powered by Apollo. So they are giving you a solution for where they are using the exact same software themselves. Now, they were created in 2004, and they have the technology really capable of going far places. And why do I say that? Is because of the contracts that they do have. Palantir wins FDA contract to power drug review and inspections back in December 7th. Now you think, okay, maybe it's just that's where it stopped. No, we do have other news as well. Greek governments and Palantir reformed digital transportation partnership. Transformation partnership. I said transportation, my bad. Palantir enters mission command space with the U.S. Army Forces Command prototype. Palantir Technologies joins the Trinity Challenge. And we're not talking about, this one has gone alongside with big names, alongside organizations including Google, Microsoft, Facebook, McKinsey & Company, Gates Foundation. These are all significant, and that's what I'm talking about. Now, the U.S. Army Research Lab selects Palantir Technologies for $91 million artificial intelligence and machine learning developments. It awards it $36 million the NCATS for the sports scientific platform environments. Now, it doesn't stop there. They even have further on. Okay, before going through financial updates, they have the continuous vital NHS network with a $31.5 million contract. That is significant. Another one here. Army Vintage reaffirms Palantir partnerships with a $114 million agreement. That is massive partnerships related to in 2019 December, where the U.S. Army selected Palantir for a $458 million production agreement to power Army Vantage, a comprehensive data analytical software to facilitate data-driven decision-making. The contract was based for a year and 3 option years, and Palantir was awarded $110 million at a time for the base year, and they just renewed it. That means even the Army thinks that, for at least the Army Vantage program, thinks Palantir is worth the try, and they had a 1-year trial basically, where I see it as 110 with the option for extension, and they renewed it. So it does show that they do have a lot of potential, and a lot of the customers are coming back. Now, the next thing here is their inaugural live demo on January 26th. They're going to hold a demo at 4:30 p.m. on January 26th, and the demo itself will include Foundry, Gotham, and Apollo platforms. And if you're investing in this one, I think this is an important one to sign up for, because you get to see what you're actually investing in. What's the technology? That is all essential. So I think we covered all different ones. Actually, I think we might have slipped one, but this is continue NHS vital work with 2-year contract. This is aside of the $31.5 million. But nonetheless, NHS personnel will use Palantir Foundry to understand how COVID is spreading and identify risk to particularly vulnerable population, productivity increase, health and care resources in emerging hotspots. It's basically through a new 2-year contract with UK National Health Services, the NHS. And they're using their Foundry software. Now, coming on towards their financial updates, what are we expecting from them? We're expecting from revenues to increase by 52% from quarter 3 2019 to quarter 3 2020. And that is massive. Now, quarter 4 really looks good, and I think that might actually extend and keep going on. Today is 31st of December, New Year's Eve, so happy New Year's Eve for you. But we get to see that maybe next year we might actually see even better. If we're seeing 52%, and we're getting to see these contracts pouring in, I think we're in for a good ride. Now, basically, in the 9 months ended September 30th, 2019, from our top 20 customer comprised 68% of their total revenue. In September 30th, their top 20 customers only comprised 61%. And what does that say? It really says that they're getting more customers. That's what you're thinking of. There is more of a spread there. If one customer pulls out, you're not much in trouble. Well, I mean, if the top 20 spending pulls out, that is probably $100 million, or at least $50-60 million. That is trouble, but just for the sake of argument, we're going to brush it off. So, really, we're looking into $1.8 billion cash and cash equivalent as of September 30th, 2020. They have strong visibility in terms of the market. So everything here looks quite nice. So the next thing we want to look at here is their valuations. Now, I'm not sure exactly because they are a new they were an IPO not long time ago, exactly how their valuations are. But if we were to look at the statistics here, do we have them right down towards... No, they don't provide these values. What we're looking for is price per book and price per share. Now, it looks like they don't have these ones ready, but what we can try to do here, and this is very inaccurate, and I do not recommend doing it, using FinViz, I do highly not recommend using it because some of the things here are inaccurate, but price over sales, we're seeing here 45.21. I'm not sure how accurate that is because we just checked Yahoo and they don't have it uploaded. 45.21 is a lot higher than the market average. The market average for SP 500 is, you're probably looking at 2 to 3 for both, for price per book and price over sales. And you get to see this one is 45.21 and 33.03. I really doubt that this is actually accurate just because of the number of sales we're seeing. Now, the market cap for this one here is 45.21 billion. So it could be that they're looking at the market cap and then adjusting to that and basically saying, hey, the current sales aren't there. But a lot of this is actually moving on towards intrinsic value. 2018 to 2019, what we get to see here is, in terms of total revenues, we've seen a little bit of an increase there, around from 595 million to 742 million. Now, their net income here, or their EBITDA, has been almost exactly similar. There's a little bit of difference there, but taking a quick look into the last quarters, we don't have a lot of that information, but in the last quarter, if you were to compare it from I believe this is the fourth quarter of December and the third quarter of 2020, we're looking into a total revenue that is comparable. Their operating income is a lot negative than we anticipated, a lot more negative, compared to December 31st, 2020. But a big part of this is the amount of cash they do have on hand. So when we're looking into the balance sheet, they do have cash and cash equivalencies. The format here is a little bit weird, but the total assets, current assets, cash and cash equivalencies is around 1.0 billion. That's as of last year, but we do have from their presentation that they have $1.8 billion as of right now. So moving on forward, we need to look into their insiders. So insiders, you don't get to see much going on. There was a sale not long time ago from Carp. That was early on December. Exercise from Glazer David not long time ago. That was actually 2 days ago. Deregistration of securities, and this relates to, I believe, their previous raisings of shares that they haven't sold, and that kind of removes the outstanding shares. Nothing significant there, but institutional buyers are really bullish about this one. They've been adding and adding and adding. I haven't seen a single dumping off their shares. So that is actually really good. It shows that all these big names as well in here. BlackRock was here. It's way up to the top. We get to see Vanguard. We get to see all these bigger names are really bullish about this one. So if institutional buyers are buying into this one, it tells you something. Now I'm jumping on towards the technical analysis point. If you haven't done so right now, please make sure you subscribe and leave notifications on. It really helps my channel. And if you would like to join our Discord to chat it up and basically discuss more stocks, it's in the description below. No pumping allowed, and we keep it safe. All right, next thing here is the one-day perspective on the technical analysis point of view. 1 week is not populated with technical indicators, so we'll move away from that. Now, currently what we have, an MACD that is going negative. That is not a good sign. The signal line is above the MACD line, and it shows in a negative trend. Now, momentum here is going negative, and it's seeing a pullback. Currently, 10 SMA is above 30 EMA. That's the green line is above the red line, and it is in the trading action zone. As soon as it breaks the 2401, it escapes the trading action zone. Currently, it's at 2352, and that is a dangerous sign. Now, hopefully, it does jump back to 2401, and you can consider that as a reversal point. You get to see every time it hit it, it kind of almost bounced back right on, except this time here. 50 SMA is at 2020. If you were supposed to drop 2020, it would be a little bit off, well, it would turn bearish, basically. And it could actually give it momentum to keep going. William % R has been oversold since the 28th of December, and the ADX shows in a negative trend, is most likely to continue. Now, on a 2-hour perspective, what we get to see here is an MACD that is also going negative, the ADX that supports a negative trend, all moving averages are turning bearish. You have a bearish trading action zone right here where you get to see it attempted breaking it and then it dropped back up. The bearish trading action zone escapes at 2520. Above 2520, you probably will see as well a reversal there. Above 2642, as of the moment, you will see a bullish reversal on the moving averages. Now, momentum is negative, and that is not really a good sign. Now, the moving average band on here, it's expected to trade 29.21 on the top, 26.55 in the middle, and 23.89 on the bottom. Currently, it's sitting below, but you get to see the moving average band hasn't been really playing through this one, so it's just for the sake of the argument. Stochastic fast and stochastic slow aren't looking the best, but they're showing you that there is a possibility for a bounce a little, or a potential, maybe a little bit of a run-up. It doesn't show that it's actually falling up as fast, but it does show that it is a really high risky play. Now, I try to go on and draw some patterns here. This is the box pattern. What we're probably going to be seeing here is if it does break the 21.23, we are in trouble, and that really signals more of a bearish move. Now, if it does break that 31.22, we're probably seeing a bullish move. Now, we're probably expecting 1 or 2 more negative days. It does touch or gets close to the $21 mark and then starts seeing a bounce. And the question is, how strong is that momentum? And if it does, is it able to break that 31.17 mark? Now, the next thing here, this one here is one of the other known patterns. It's called the symmetrical triangle, and it is actually, in fact, a bullish pattern. So we do expect that it doesn't break through this triangle. Currently, the bottom of that is around $22.97, while the top is somewhere around $28. If it does break the $28, you can expect a little bit of a push. Now, the next thing we're going to be doing is Fibonacci retracement, starting at the 33.50 mark, and then dropping down all the way to 8.90. Significant resistances include 24.13, 28.26, and 33.50. Significant supports on the Fibonacci retracements is 21.22, 18.31, and 14.72. Now, we can go ahead quickly and check significant supports and resistances using price line actions. So 23.55 is a significant support, 22.55, 21.59, 21.12. We're looking at 19.62, $18, 17.15, 16.15, and then 14.42, and going to 13.88. Significant resistances currently as we speak, 24.09, and then we're looking at 24.78, looking at 25.75 up here, 26.48, 26.87, 28.25, 28.95, $30.18, and then all the way up to 31.26, and then the 33.50. Now it comes to the question and what do you think we should do? What do you think about this one? Now, I do really like their technology. I think it's a game changer. I think it has a lot of future. Balance sheets doesn't look as good, but I've had a lot of that criticism before, and I was told that they will be improving their balance sheet. They have a lot of plans, and a part of this was the IPO expenses. So you know what? We're going to let it slide. We're going to put in IPO expenses. Currently, it is trading on intrinsic value. That scares me a little. I want some accumulation, but I'll probably buy this one somewhere, hopefully, well, if it does dip around $17.81 or $15, I would definitely buy it and leave it up for 5-10 years. Don't expect this one to go bankrupt. I mean, the technology here is insane. They always can just downgrade and restructure, but I don't think this one has a bankruptcy risk at all. I think it's a really bullish stock. I think it's a long-term stock. Market correction might hit this one as well, so be careful on that if that happens. Now, trading-wise, I do think it's a really high risk for a bounce somewhere after it hits the 2186, although I do think that it might actually see a little bit of lows, probably $17, $15. That's where you might actually buy in, and then you see a bit of a bounce up. But in all directions, I do think that this one will bounce sooner or later, and it definitely is a solid long-term investment. What do you think about this one? Make sure you mention down in the comments below. Share, subscribe, and like. You have a wonderful day.